Hello, YouTube. Welcome, welcome. Just getting things set up here so we can all be looking at the same thing. Take me just a quick moment here. All right, let's make sure we have everything running the way it needs to be running. Okay, I think we're ready to go. Welcome, welcome, welcome. Okay, this is the Asia session. We're trading gold futures tonight. Have a couple of spot trades open. They are in drawdown, and I'm expecting to either need to hedge them or to let price continue to move back up toward them, and eventually I'll get out of those. In the meantime, we're doing some gold futures tonight. Oh boy, it looks like I am not visible on here for some reason. Oh, I see what's going on. There we go. There we go. All right. Let's see. So as I said, we're trading some gold futures tonight. Right now it is 7:50. I'm going to set an alert for myself. 7:50 p.m. in New York. So that is where we keep time for all of our sessions on East Coast US time, regardless of where we are in the world. It is 19:51, 19 hours 51 minutes. I'm going to set a alert for 19:59 so that I'm alert for the hourly candle. Another one for 8:29, 8:59, and 9:29 if we happen to still be around at that time. It's unlikely, but you never know. We have a hard stop certainly at 10 p.m. East Coast time. So that's just one of my rules. Never trade past that time in an Asia session. All right, let's log into the broker. Let me get MetaTrader 4 set up so that we can all see that together. That here on Team Viewer, so I'm going to connect. It's going to ask me for the passcode, so just one moment. All right, there we go. Here. And now let's get the, we'll come back to what this is here in a moment. I get that up. In the meantime, we'll switch it over to the other screen. Okay. All right, let's do a little analysis. Let's get the chart set up properly before I do a little analysis. All right. Here on the bottom left, we have, well, maybe I shouldn't start here, because those charts look a little confusing. So let's do it this way. Here we have a naked chart. This vertical gray line here marks where we started the session, well, where the day divides, so to speak. Market is closed between 5 p.m. and 6 p.m. East Coast time. So the market opens at 6 p.m. and that's what this gray line indicates here. Each one of these bars is called a candlestick, and each one of these represents 5 minutes of price movement. Bullish candles when the price is going up are yellow, and bearish candles when the price is coming down are blue. Now you may notice that these candles look a little bit different than your standard candles. These are Hakanashi candles. I use Hakanashi candles because it helps us determine the direction or see the trends more clearly. They show less chop. We can get into specifics of how a Hakanashi candle differs exactly from a regular candle, but for the moment, that's how I'll explain it. You can ignore this horizontal line here that says pancakes. That has to do with that spot gold trade that I was telling you about. This is where, that's not even where my hedges are. And since I'm not hedged yet, need to turn that there. Again, this is nothing you have to concern yourself with. It's just going to confuse us if we talk about that tonight. So that line there, that blue horizontal dashed line there, you can just ignore it. The other horizontal lines do, however, mean something. This big blue band right here is last week's low of the week. So we are below last week's low of the week, and we've been below it since, well, I guess since about 10:30 a.m. on Thursday, New York time, and we remain there. This is a pivot. the WM1, the weekly midpoint 1. So that is the nearest pivot above us. And the nearest pivot below us is the MPP, the monthly pivot. And actually, the nearest one to us is the DM2. That is a spot where intraday sellers tend to take profit. So you see, as we got down to that level, there were some buyers there, set the price back up. Now it looks like it wants to come back down and retest this area. We'll see if it does, or if it hits it again and bounces off, or if it's able to push through. Now something tells me it's going to be harder to push through than usual because we have two pivots stacked right next to each other. Two important pivots, the DM2, daily midpoint 2, and the monthly pivot point. The orange lines that you see running here represent the volume that was traded yesterday. The way that I calculate that, let me show you here. If I go to a 15-minute chart, is I'd take the fixed range volume profile indicator, I drag it from the previous day's open to the previous day's close, which was 5 p.m. today. All right, I'm going to put that right there. Then you see that this, whoops, I need to escape there. You see that this whole thing forms, this crazy little pattern here. What this is, it shows from all day, all day, so 6 p.m. last night to 5 p.m. just a little while ago, that all of the volume was traded, from here to here, but 70% of the volume was traded from this zone here where I've marked, that's our value area high, to down here, our value area low. And then the most volume, where it spiked the most, was right here. And that's what we call our point of control. So what we'll notice in today's market is that price will react to these levels in a similar way that it reacts to a pivot level. Price will get there, evaluate its life choices, and decide which direction it wants to go from there. But you don't want to trade into one of those. You don't want to take a buy as you're approaching one from the bottom, or a sell as you're approaching one from the top, because price is going to get there and it could turn around on you. So we treat these almost the same way as we treat pivots, with a little bit of other contextual information that we throw in there. All right, so that is a naked chart with pivots only. And we have 1 minute before the 8 o'clock candle. So I'm going to pause the analysis here for a minute. I'm going to switch back over to my 10-second futures chart. I'm looking at our context, and I have the analysis kind of in my mind already as I'm watching this all day. So I'm just going to wait and see if we get an interesting move here at 8 o'clock. In about 20 seconds. And if we do, I might take a trade. Now it's unlikely because I'm already seeing over here on the right side of the screen that the dollar is barely stronger than gold. We do see some, downward tendency in this price, but I also see that we're in this huge support zone right here. And that's going to make it hard for gold to move without it being choppy. There's the 8 o'clock right there. Gave a little impulse to the upside, and now showing it wants to, I guess, keep doing that, keep going up. Let's see how much energy it has. The reason we get a little volume at 8 o'clock is the Sydney market is open the first 2 hours of the session. And it is now at 8 p.m. New York time that Tokyo comes online for their Friday morning. If you're hanging out, please like the stream, drop a comment. I'll chat with you, answer any questions you have. All right. So doesn't look like anything exciting was happening there. So let's get back to this analysis over here. So this is the naked chart, as I said. And now I'm going to put the indicators in here, which is going to make this look very complicated, but it's not. And we'll explain it so it doesn't overwhelm you. Okay. You can ignore all of these red and orange boxes that popped up and this green one here. Just ignore it as if it's not there. Let me take it away again so you can see. All right? Ignore those boxes. Don't need to think about those. Ignore the squiggly lines in here. Don't need to think about those. Ignore these dashed lines that are kind of going all over the place here, except this one here, and the one that goes right down the middle of that channel. Now that could be a little confusing because I have this horizontal dashed line here that I told you not to worry about. So ignore this one. Just keep this one in mind, the one that goes through the middle, and the one here. This is a regression channel, and it is showing us the current trend of the market and the width of the range in the market. So we're in a downtrend right now on the 5-minute chart. If we look at a 15-minute chart, we're also in a downtrend. See, here they are. So we will see if this downtrend has enough energy or enough continuation to push through, as I said, the DM2 and the MMP, which are right here. We can push through to the downside, or if it's going to bounce off again and then maybe start heading up, and maybe at this point we begin creating an uptrend. Now, the only thing that would give us an uptrend tonight would be if there are really enough buyers lurking down here, or active buyers come in and start driving the price up. We don't have any news catalysts happening tonight in the Asia session that's going to send price one way or the other, unless of course something unexpected happens. You could have one country bombing another country, or the president of the United States saying something that moves the market, or that spooks the market, or that reassures the market, or post something online that would give that impression. So what I'm seeing now is we are getting some more downward movement. It looks like we are going to come close to bumping up against the DM2 again. Let's see if that happens. Move back to the 5-minute chart here. Now I'm going to go over to the 1-minute chart. So we see this box here is the beginning of the Asia session. I have an indicator that boxes that off for me. So from 8 p.m. to 11 p.m., it forms that box. You'll see it here on the 15-minute chart a little bit better. It's this box here. 15-minute chart, it will only be 12 candles, so it fits in a much tighter space. On the 1-minute chart, that's going to take 120, 180 candles. So the box is going to be much bigger. Now, sometimes what this likes to do is it will come down, it will punch through those two pivots, only to be rejected and come up. This is the VIX, the volatility index. It is at 14.83, which is low. That means we don't have a lot of jitters in the market. We don't expect a lot of jerkiness, other than due to low volume. When there aren't a lot of participants in the market, then any one participant who places a large order won't find buyers or sellers in the proximity of where they entered the market. So price will have to move further to find passive buyers who've set up automatic buys or sells when price reaches a certain level. Yeah, normally this kind of movement down, this is a 1 minute chart, Hakadashi on my MetaTrader 4. So to the left of my screen that we're looking at, uh, and just to kind of give you context here, I look directly at the screen that I'm sharing with you. So what I'm looking at right in front of me is what you are seeing. Um, right above it though, I have a 1 minute chart, which is this. I have this chart on a screen the same size right here above me, so I can see that at a glance. I don't need to flip the screen. So sometimes I really just want to keep my eye firmly on this one, but I want context. I want to know what's going on other time frames. So I can look at the screen above me. I can look at MetaTrader 4, which is this screen and this screen to my left. I can look to my right and I can see a 15-minute chart, which would be, this one. I can see that right here, but to my right. And then behind me, what you see back here is a 1 hour chart. So I can look at these quickly just to regain my bearings on where the market is structurally, but then keep my eye on the actual price action that is happening right in front of me by looking here at the 10-second chart, which is the one that we trade futures off of. And you will see that this price is different. Futures price is usually a bit higher than the spot gold price, but they move in tandem most of the time, and I mean 99% of the time. So I can look at the micro movements and the price action of spot gold and see exactly what it's doing on futures as well. So this is the only futures chart I have open, is this 10-second one. For everything else, I'm looking at spot gold. We do our charting on spot gold. I have a 5-second spot gold chart on an iPad right below the screen here. I don't know, maybe I can show you. Don't know if I can. Let's see. Not that one. It would be this one, I guess. So you can kind of see here what's in front of me. I've got like this big screen above me. This is the screen that you are seeing. You know that this is the one I'm broadcasting from. Over here, it's my MetaTrader 4, and yeah, and now the camera is coming from the screen that you were seeing previously. We'll do that again. Go over here. Is this right? Nope. This one. Right there. This is the one behind me. Okay. Enough of that. Entertaining, right? Are you not entertained? Are you not entertained? Okay. I do my journaling by hand. My handwriting gets floppier than usual. That is usually an early indication for me that something is changing within me. I'm getting anxious, or maybe a little upset at a loss I took or something. And even though I can feel that in my body, sometimes the early indication is that my handwriting is getting sloppy. Okay, let's settle in. Settle in. You also want to pay attention to these horizontal lines here, going across. These are support and resistance areas that I have an indicator that just draws them for me. You learn to see them anyway, but I like to have the indicator just draw it for me. It makes it easier. Being an elite trader is not about how difficult you can make it for yourself. It's about making money. And we use tools for that. Stop losses, indicators, learning price action, understanding market structure, and trader psychology. Understanding your emotions, understanding how you react to emotions that you're feeling. Knowing when you're likely to go on tilt, or when you're likely to start making bad decisions, and removing yourself from the situation when that happens. Yes, it's about controlling those things, but we're all human. We can't avoid those emotions sometimes. Sometimes you get that feeling you just want to hit someone, but you don't, because the consequences, are being hit with an assault charge, ending up in legal trouble. Somehow wrest yourself away from that situation. You have to do that trading too. You have rules. Treat them like laws. No matter what happens, we do not overtrade. We do not revenge trade. We don't trade when we're upset and feel like revenge trading, even if we're not revenge trading. And we're telling ourselves, okay, we're not going to revenge trade. But if we're emotionally compromised, you can't perform like you're in the zone, like a professional athlete. And we trade in the zone. Feel me? Hindsight, you always see good trades you could have taken. But in reality, there's no way we really could have known with certainty that this was what was going to happen. Maybe somebody who always trades this pattern knows that this was going to happen. That's not the pattern I key into. That's not what I look for. I'm looking for price to break beyond this resistance right here, or below this support right here. And actually, if it's going to break below this support right here, I'd like it to break below this swing low before I start trading it down here. And it's okay if it comes down here and then turns around and goes back. That's okay. I'll take the profit from, from here to here, or however far it goes and where I can click out of it. And I want to see it moving with some decisiveness below here. I don't want it to just kind of be creeping along. And the same goes for up top, whatever's going to happen here. So I want price to be in a certain spot on the chart, but then I want it to be moving in a certain way. So much of trading is sitting back and not doing anything. And knowing when to do that. All right, now there might be moves a little decisively to the downside here. We are seeing a little strength differential between gold and, so yeah, they're gonna, no, actually no. No, so I was thinking about taking that, but I glanced to my left and I saw these charts. This is a 15-minute chart, and this big blue area is a big support zone. It is big. But what that indicates to me is, as I was saying earlier, coming down onto this DM, that's not it, onto this DM2 and the MMP, this area right here. So essentially what that other indicator is telling me is that from here all the way down to here, there's a lot of chop. And even though it looked clean on this chart, you know, that there was a little trade to take from here to here, from here to here, I am in the midst of a generally very choppy area. So as long as price is in this area, on that chart, on this chart, on this 4-hour chart over here, it's really kind of all the same. I don't want to be involved in trades that are taking place in this area. It's, you know, that's where traders go to die. That's where accounts get blown. And no, I got better things to do, including just sitting here and doing nothing is a better thing to do. Capital protection. Protect your capital. Number 1 rule, don't lose money. Number 2 rule, don't lose money. Number 3 rule, make money where you can. If you do that, you'll be a successful trader. All right, so I do like seeing some movement to the upside, but again, here we are on this 1-minute chart that you see right here on my MetaTrader. We are in a consolidation zone. So, you know, even if price is created some exciting movements in there and I expand it, you know, I can make that area right there look pretty big, you know, and then the movements look a lot bigger or a lot more powerful. This is really just a small band that price is in right now. You see, it's just kind of going like that. This is from 33.80 to 33.78. It's not even a 2 pip zone. So again, I want to see price move above this swing high, below this swing low at least. Probably, well, certainly on the downside, much lower than that. On the upside, it looks like we have some space to trade without a lot of obstacles, but we need to get out of this area here, probably up to 33, 38. We're at 33, 35 now. If you're new, visit the BarcelonaTrader.com, where you will see a lot of trading related information, articles, insights, market analysis. If you go to the homepage and scroll down a little bit, you'll start seeing some of our blog posts, and right above the blog posts is a search bar where you can search, you know, certain information. If you have, you know, a question about margin, or a question about stop hunts, or a question about what indicators we use, you know, just type some keywords into that search bar and see what articles come up. We've got, we cover a lot of things, and we're publishing new articles, you know, every couple days. So you can sign up to the newsletter. It's free, and have those articles delivered to your inbox. All right. I will be right back. Okay, I'm back. It is almost 8:30. We're going to have that 8:30 candle here in just a moment. We're 30 seconds away from 8:30 candle. Be right back again. I left my Apple Pencil somewhere. Find my Apple Pencil? I did not. Yes, I did. Blended right in with my keyboard. Couldn't even see it. Camouflage. This market is doing nothing tonight. Nothing. The indicators that are indicating anything are pointing toward a bearish gold market. There are some other indicators that are giving neutral guidance, but none are giving the indication that we are in a bullish gold market. Let's take a look at a bunch of indicators. Sell, neutral. Right. We can move above this point of control right here. That might be an area where we can take some buys. But again, I need to see some, something other than just price action telling me that we're going up. Ideally, I'd like to see gold gain strength, the dollar lose strength here on this FX Blue relative currency strength indicator, but right now they're both measuring positive 0.2 parity between the two. That's not enough for me to have confidence that we're moving in this direction. Yes, we come to make money. Mostly we come to not lose money. An abundance of caution is what I'm shooting for here. Might be getting into territory where we can take a buy. I don't know. Here we are on this 1 minute chart. We're not quite out of this consolidation zone. Not quite ready to take a buy on it yet. If I didn't have MT4, I'd probably take a buy in this range where we are right now. But because I have MT4 and I can see that we are still got a little resistance there. I can also see that here on the 5 minute chart. I don't want to get into that buy. See? It's reacting a bit off of that. I don't know if you can see that candle beginning to form here, but you can see the Renko starting to come down. It hit that resistance, and it's reacting off of it now. Tono, my mentor, trading partner, has really studied these indicators that we use on MT4. And the ones that we use on TradingView for that matter too, most of them. I mean, they really save a lot of drawing our own lines on the charts. Okay, looks like it's trying to move up through there. That is a good sign. I think if we bust through this one with some decisiveness, it's looking like it's trying to do that now. Let's see. I added a buy. And it looks like that was a bad decision. Maybe. I think it was the right decision, but the chart's going to do what the chart's going to do. I entered it when I got my signal. If this is a loss, it will be a good loss in the sense that I have taken the loss following my rules. Let's see. We're in the trade, so I guess if it invalidates much, I'll get out of it, but let's give it a chance. Formed another support right there here, or resistance right there on the 10-second chart, and on the Renko that I can see. I'm not going to flip to show you the Renko right now because I'm watching it to my left, but I want to keep my eye here on this 10-second chart where I can see my floating L. Ooh. Ooh, we're going to get stopped out. Most likely. Yep. All right, that was a loss. All right. Change the stats. That is what it is. Now, I would say that relative currency strength wasn't diverged enough there. It didn't have enough strength in gold and weakness in the dollar to push us above where we got there. Perhaps price was a little bit overextended by the time it got there. I don't know. I got in on this candle. Very decisive, you know, right after previous candle, big flat bottom, nice wick on top. Next candle, I got in. So we needed to get, you know, kind of above this area. We just couldn't push through. It's going to come back and try again. Sometimes the first mouse springs the trap and it's the second mouse that gets the cheese. I was the first mouse that time. We have about 1 minute and seconds for the 9 o'clock candle. All right, maybe we're going to take another run at these pivots down here. That's the VIX. That's not the right chart. I guess we have a ways to go now before we get to these pivots, but we are coming down with, we're coming down. Some decisiveness there. Now if I go back to here, I see that we have a support right here, created over here. So unless this comes down a little more decisively than it is, it's probably going to stall out there and move back. All right, we're going to try again. It created a new swing high here. That wasn't there, obviously, when I got in the first time. Since it came down here and created this low, we now have a swing high up here on the 10-second chart that we need to break through if we're going to go up. Again, no difference in strength between gold and the dollar. I will sit the next one out. Let's take a look at what the dollar's been doing. The dollar has been falling. So that augurs well for good for gold price. Going up. I'm going to put these charts in their proper order, so bear with me for a second while I all right, here we go. First, the VIX. Then, the dollar and yields. Let's see, then we will go with the 5-minute. Oh, where's the 1-minute? How'd that happen? That doesn't go there. Okay, now it goes. 5-minute, 1-minute, then MT4, and here we go. All right, well, we already know we need to stay away from the bottom. We're not going to trade down because of all this big support area that we're already kind of into here. On the 5-minute, we're going to run into it here, and on the 1-minute, we're going to run into it here. It's too much chop to trade there, I think. Alright, well, 9 o'clock didn't really bring us much of anything. I usually am packing it in about this time in the evening. We're getting some real downward movement right now. But again, we're in this area. This support here on the 15-minute. We're hitting the support here on the 5-minute. And we're coming up on the support here on the 1 again. And if we look at where we are, see prices again approaching this DM2. Now, price was really choppy here. By the time this candle formed, that first candle there certainly wasn't enough to inspire us to get into a trade. This candle is the first candle where you would say, okay, there's some interesting movement here. It was this candle would be the confirmation to get in. But once you're on this candle, you see that it doesn't have a lot of room to run. And you're like, well, I don't want to take that trade. So those were not my pips. Not my pips. I could take this bounce up, but over here I'm seeing that gold is much weaker than the dollar, and I'm just not getting enough out of price action to say that I want to get into that. In fact, I'm thinking about calling it a night here. We took a loss. It was a good loss. I got in when my rules said to get in. Once we took the loss, we didn't revenge trade. We didn't try to make that money back by getting into a less than ideal setup. And that's what disciplined traders do. That's what disciplined traders do. I'll make that back tomorrow. Not, I'll make it back on Monday, Sunday night. When you have an edge, you know that you can always make that money back. But you can't always make it back in any given moment. But you know that out here on the Serengeti, you are a patient lion. A warthog or a gazelle is eventually gonna pass by where you're hidden in the grass. You're gonna be able to spring and take that trade. That's when you'll eat. You eat what you kill. Okay. Well, thank you for joining me here tonight. I will see you bright and early tomorrow, 7:30 a.m. for the New York session. I'm going to schedule that session on YouTube as soon as we're off here. And so if you stay on YouTube here for a minute, you can you'll see that in just a minute or two, and you can set it to notify that when we're getting started. I'd love to see you around here tomorrow morning. Have a good night. As I said, really appreciated you hanging out with us here. See you tomorrow.